Hey traders, in this video, I'm going to show you exactly how to trade any cryptocurrency pair on any cryptocurrency exchange with the TrendScrapers technique. In fact, after testing all the crypto trading strategies I found on the internet and getting nowhere, I decided to use a crypto trading strategy I call the TrendScrapers technique. And this simple strategy increased my ability to make more money in the cryptocurrency markets by over 200% in 7 days. Now that I've showed you how well the TrendScrapers technique works, it's time for me to walk you through the step-by-step process. Starting with step number 1, you have to choose to trade short or long based on the price conditions of the Bitcoin market price. So if you want to make more money in the cryptocurrency markets every single day and every single week and every single month, you have to choose to trade short or long based on the price conditions of the Bitcoin market price. Why? Because the Bitcoin market price is the master controller of the entire cryptocurrency market price action. For example, if the Bitcoin market price bounces up by 5% from its most recent low price, you've got to hunt for all long trading opportunities in the cryptocurrency markets. But if the Bitcoin market price dumps by 5% from its most recent high price, you've got to hunt for a short trading opportunities in the cryptocurrency markets. So as you can see on the candlestick price chart data, the Bitcoin market price is currently trading from its most recent low price. And to identify the most recent low price of the BTC USDT cryptocurrency pair, you have to zoom out on the candlestick price chart data a couple of times in order to get the exact price of the most recent low price. So as you can see on the candlestick price chart data, the most recent low price of the BTC USDT cryptocurrency pair is exactly at $16,256.20. And from the most recent low price, the price action of the BTC USDT cryptocurrency pair bounced up by 4.95% and then dipped back down to 1.93% and then bounced up again by 4.44% and then dipped back down to 0.46% and then bounced up again by 4.54%. And now the Bitcoin market price is still trading below the standard 5% bounce from its most recent low price. And that means you have to keep hunting for short trading opportunities in the cryptocurrency market. Note, there will be some long trading opportunities in the cryptocurrency market, but the price action of most cryptocurrency pairs will most likely dip back down to the stop loss price a few times before they can turn into profits. So be very careful in this market conditions to avoid taking too many losses every time. So now it's time to keep hunting for short trading opportunities in the cryptocurrency market. Okay, now it's time for me to show you step number 2 of the TrendScrapers technique, which is to identify the most current bearish transaction of the cryptocurrency pair. Make no mistakes, the candlestick price chart data of any cryptocurrency pair is divided into bullish transactions and bearish transaction of the cryptocurrency price action. And that's absolutely all that you'd ever need to perform proper technical analysis of any cryptocurrency pair. So the most current bullish transaction of any cryptocurrency pair starts from the lowest price of the green candlestick bullish trend starter. And the most current bearish transaction of any cryptocurrency pair starts from the highest price of the red candlestick bearish trend starter. With that out of the way, one of the worst performing cryptocurrency pairs on the list, it's the DENT USDT cryptocurrency pair. And the most current bearish transaction of the DENT USDT cryptocurrency pair started from the highest price of this red candlestick bearish trend starter. And to identify the highest price of this red candlestick bearish trend starter, you have to zoom out on the candlestick price chart data a couple of times in order to get the exact price of the highest price of the red candlestick bearish trend trend starter. So as you can see on the candlestick price chart data, the highest price of this red candlestick bearish trend starter is exactly at 0.000818 cent. And from the highest price of this red candlestick bearish trend starter, the price action of the DENT USDT cryptocurrency pair dipped back down to 26.22% and then bounced up by 11.79% and then dipped back down again to 22.0% and then bounced up again by 14.19% and then dipped back down again to 21.26% and then bounced up again by 14.07% and then dipped back down again to 23.69% and then bounced up again to 18.14%. So as you can see on the candlestick price chart data, the most current bearish transaction of the DENT USDT cryptocurrency pair is currently trading at 20.64%, which is a little higher than our entry price. So be patient and get ready to place your short trade order soon. Okay, moving on to step number 3 of the TrendScrapers technique, which is to plan out your trade entry, stop loss, and take profit prices on the 4-hour candlestick price chart data of the cryptocurrency pair. You obviously don't want to buy cryptocurrencies at random prices without properly identifying the best prices to buy and sell them. So you have to outrightly plan out your trade entry, stop loss, and take profit prices on the 4-hour candlestick price chart data of the cryptocurrency pair. For example, if you want to trade this cryptocurrency pair like I'm getting ready to trade it right now, your entry price will be constantly at the 15% of the most current bearish trend section, and then use the blue horizontal line to indicate your entry price, which is 0.000711 cent, and your stop loss price will be constantly at the 9% of the most current bearish trend section. And then use the red horizontal line to indicate your stop loss price, which is 0.000750 cent. And your safety price will be at the 22% of the most current bearish trend section. And then use the pink horizontal line to indicate your safety price, which is 0.000670 cent. And your first take profit price will be at the 30% of the most current bearish trend section. And then use the white horizontal line to indicate your first take profit price, which is 0.000628 cent. And your second take profit price will be at the 45% of the most current bearish trend section. And then use the white horizontal line to indicate your second take profit price, which is 0.00564 cent. And finally, your third take profit price will be at the 60% of the most current bearish trend section. And then use the white horizontal line to indicate your third take profit price, which is 0.000511 cent. So as you can see on the candlestick price chart data, your entry price is at the 15% of the most current bearish trend section, which is 0.000711 cent. And your stop loss price will be at the 9% of the most current bearish trend section, which is 0.000750 cent. And your safety price is at the 22% of the most current bearish trend section, which is 0.000670 cent. And your first take profit price is at the 30% of the most current bearish trend section, which is 0.000628 cent. And your second take profit price, it's at the 45% of the most current bearish trend section, which is 0.000564 cent. And your third take profit price, it's at the 60% of the most current bearish trend section, which is 0.000511 cent. Now, before you move this price data into the Binance order form of your choice, it's time for me to show you the final step of the TrendScrapers technique, which is step number 4, decide your live crypto trading entry and exit conditions. Look, traders, the price action of most cryptocurrency pairs can become very volatile and highly manipulated by the exchanges and market makers. And that's why you need to have some sort of entry conditions in place before you can jump right into executing any live crypto trading activity on the exchanges. For example, there are 4 entry conditions to be considered before executing any live crypto trading activity, and they are the single green candlestick, single bounce entry conditions, the double green candlesticks, single bounce entry conditions, the single green candlestick, double bounce entry conditions, and the double green candlesticks, single bounce entry conditions. The single green candlestick, single bounce entry conditions, of course, when the price action of any cryptocurrency pair bounces up from the lowest price of the green candlestick bullish trend starter to the 15% of the most current bearish trend section. The single green candlestick means that the price action of the cryptocurrency pair bounced up from the stop loss price to the entry price in one single green candlestick. Why the double green candlesticks means that the price action of the cryptocurrency pair bounced up from the stop loss price to the entry price in 2 green candlesticks. For example, if a single green candlestick moves from the stop loss price to the 15% entry price, there is a high chance that the price action of the cryptocurrency pair it's being manipulated and will most likely dip back down to the stop loss price, and that could be the quickest path to taking a loss on any crypto trade. But if there are 2 or more green candlesticks between the stop loss price and the entry price, there is a little chance that the price action of the cryptocurrency pair it's been little manipulated, and you could see a 5% to a 10% profit before the price action of the cryptocurrency pair will experience any sort of downward pressure. So if you want to trade on the single green candlestick, single bounce entry conditions, you have to be very careful of price action manipulation by the exchanges and market makers of the cryptocurrency pair. You can say, I want to see the formation of 2 green candlesticks between the stop loss price and the entry price before I can participate on this live trade. And you can also say, I will only risk 1% of my trading capital so as to minimize losses on this particular trade in case the price action dip back down to the stop loss price. You can also say that if price action bounces to the entry price from the stop loss price in a single green candlestick, you will not trade this cryptocurrency pair till it proves it's ready to move up. Now let's talk about the double bounce entry conditions. The double green candlesticks, double bounce entry conditions, it's one of the safest and most profitable approaches to cryptocurrency trading, and here's how to get it right. Double green candlesticks, double bounce entry condition is used to buy cryptocurrency pairs that have first bounced up to the entry price and then dip back down to the stop loss price before regaining momentum to bounce up to the entry price again before you can participate on a live trade. So if you want to trade using the double bounce entry conditions, you have to wait for the price action of the cryptocurrency pair to hit the entry price for the first time and then dip back down to the stop loss price and then bounce back up to the entry price again for the second time before you can participate on the live trade. Note, if these entry conditions are not satisfied on the 4-hour candlestick price chart data, you will not participate on this live trade. For example, example, if you want to buy any cryptocurrency pair via a single green candlestick that bounces from the stop loss price to the 15% entry price, you want to be very conscious of risking a very small portion of your trading capital. But if there are 2 or more green candlesticks between the stop loss price and the entry price, there's a high chance for the trader turning the profit before the price action can dip back down to the stop loss price or keep pumping up to the highest price of the bullish trend. So risking a higher amount of trading capital won't have so much dangerous effect on your trading capital. Make no mistakes. Do not buy cryptocurrency pairs that are currently trading in a 4-hour red candlesticks, and only buy cryptocurrency pairs that are currently trading in a 4-hour green candlesticks. Finally, let's talk about your live crypto trading as it conditions. The question is, how should you react to the volatility of the price action of any cryptocurrency pair? You have to do something whenever the price action of any cryptocurrency pair moves past your entry, your stop loss, your safety, and your take profit prices. For example, if the price action of any cryptocurrency pair dips back down to the stop loss price once your buy order is completely filled on the order book, make sure to sell your entire cryptocurrency portfolio at a loss and be excited about it because you properly acted on your trading plan. But if the price action of any cryptocurrency pair bounces up to the safety price and immediately starts to dip back down to the entry price, make sure to sell your entire cryptocurrency portfolio at the entry price to have a break-even trade. Also, if the price action of the cryptocurrency pair bounces up to the forced take profit price, make sure to sell 50% of your cryptocurrency portfolio and reserve the 20% of the cryptocurrency portfolio to be sold at the second take profit price or at the entry price if the price action dips back down to the entry price. And finally, if the price action of the cryptocurrency pair continues to bounce up to the third take profit price, make sure to sell the remaining 25% of your cryptocurrency portfolio in profit or at the entry price if the price action of the cryptocurrency pair dips back down to the entry price. So traders, now I want to turn it over to you. Which entry conditions are you going to try first? Are you going to try how to use the double entry conditions to place your next buy order on the Binance exchange? Leave some comments below right now and I'll see you in the next video lecture. Thank you so much for watching.